Good morning. Good morning. It is Thursday, the 26th of October, 2017. It's 9:02 a.m. New York time. Thanks for joining me for another Trader Bite. We should have no buffering today, so you'll be glad about that. I'm on our fiber optic connection. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Overall, the market stance this morning is more allocation to risk. Of course, a lot came through in the overnight session and continues to, chief of which is the fact that Janet Yellen, the current Fed chair, is out of the running for being selected for the next Fed chair. We are left, also Gary Cohn has been reportedly pulled out. We're left with Jerome Powell, Kevin Warsh, and John Taylor as the final candidates. We got the news on Yellen at about 8:02 Eastern U.S. time. If you look on your chart, you'll see a big bar during that time, and that's what that was. It looked kind of interesting on the heat map. I'll show you that in a minute. But that's the big news. In addition to that, we got the ECB announcement. ECB leaves the 7-day refi rate unchanged at 0%, extends QE by 9 months until September to 30 billion euros per month. That's also important. We see the euro down 0.21% or 24 pips, not much of a reaction there. The rest of the market is up. Gasoline is down, and the NASDAQ is slightly down. It's down 6 points. Twitter came out with news this morning that, or there's been news released on Twitter that they've overinflated the number of users for the last 3 years. But they say that the expectation is they'll turn profitable in the next quarter or so. Don't know about that. Anyway, the leader today is the Euro Stoxx 50, up 0.67% or 24 points, followed by the DAX. DAX is up 77 points, trading at 13,000 plus, 13,017. And that's how things are shaking out. Now, let's move on to our look on yesterday's action. This is what was expected yesterday. We were opening weak. The expectation is for a push to around value low, which was at about 25.65. At the time of the trader bite, we were trading at 25.63. Expected resistance at 25.65 at the prior day's value low on a balanced profile. And then I was looking for a move lower, as I discussed at length yesterday. Looking for a move lower and out of range to break the overnight low stat. And then from there, I expected a bounce up on the close. With the market, this is basically what the market did, except that it went much lower. It went down to 41. Here's what it actually did. 25.65 ended up being the high of the day, 25.65 against the prior day's value low. That was right on the spot. However, it did push down. It did push down to 41.50. That was much more extended than I expected. I was looking for it to push to the next MC point of control of the lower balance. So this is the lower balance. We broke out. We broke out strong on the 5th and have traded sideways for several days, and we ground up until we gapped up on the 20th. So I set that up as a separate balance area, and the point of control of which was 25.49. We had a small balance in that area. We pushed down, we backed off, we pushed through, we had a small bounce, and then we continued down to 41.50, and then we ended up pushing through mid, through the IB on the way back up. Again, we pushed through the IB low. Yesterday was not a trend day. The market closed back in the initial balance, and we're trading higher. So what we have now, in my opinion, is a pretty decent base. Below us right here. We've poked through. We've poked through, we've tested, and we're pushing back out of on the way out of the prior composite. And so what we're looking for now is back up to this MC point of control at 73. Okay, we're trading at 61. That's 12 points away, well within reach. So that's how things shook out. Pretty good negative delta yesterday. Pretty good participation on the sell side. It was nice to see that, but the market ended up taking it all back and coming back to almost zero, negative 1507 on the close. So the buyers, the aggressors on the buy and sell side, after all that work yesterday, were balanced. So what we have is we opened and then closed lower, and then the delta closed just slightly lower. The volume was in line with price, and so this was a very, very reasonable auction, or orderly auction. Let's take a quick step back. Let's get rid of these labels. And this is basically what we accomplished. This is a composite profile chart. Each bar represents 1 day of trading on the pit session, not all sessions. And you can see here, this is the profile. This is the profile that the composite that we broke into yesterday. And this is the upper composite. The upper composite's formed on a gap and 3 days of trading, and we've dropped out. And what we did is we left this long wick beneath us. This, in candlestick speak, even though it's a bearish close, this really is an excess low here. The auction tested down all the way to 41.50 and ended up finishing at the upper end of the range. This is quite bullish, in my opinion. Okay, and so this is setting us up for potentially a basing day today, and then a rally over the next few days is what it looks like. The Russell looks quite different. The Russell still looks weak. The small caps are still struggling to find buyers, but the S&P overall has shown a lot of strength. Okay, so that takes us to our next. Oh, we have a lot of lines here. No likey. That takes us to our plan for today. Oh, the next thing we need to look at is the overnight. So what did we accomplish overnight? Overnight, really strong volume, almost twice what we've had on average over the last few months. Good participation again, just like we had yesterday. Yesterday in the overnight session, we had pretty good participation. Remember, I talked yesterday about strong kurtosis in the overnight session, giving us, given that we have volume, this gives us a strong indication that there's likely to be strong movement out of there. When the standard deviation is really narrow, the first standard deviation is really narrow, the data set's very, very compressed, and we're likely to push out in a strong way, and we did out of yesterday's range. Today, what we have is a double distribution profile in the overnight. We traded mostly sideways in the overnight session, pretty typical. We hovered around the close of yesterday. Inventory was pretty much flat, and then this morning we started to rally. Right after some European releases, we started to rally, and then we had the Yellen. This bar here is the Yellen news right there, and the market has completely recovered from that, and we pulled back to the mid of the session after that, on the rally after that news, and we're hovering sideways here. The market's showing strength overall. Inventory is currently positive, but we've spent most of our evening, most of our overnight session below yesterday's close, so that may balance out. Inventory on volume is balanced. So on the open, not expecting too much crazy stuff going on. Pardon me a second. We have a wide-ranging day yesterday. I expect it to be stuck in here. We're likely to continue to test higher. I expect that the prior day's close, the gap above, in this area up here, the 67, is likely to pose some resistance. And then overall, I'm expecting it to not go too far. I do expect some volatility on the open. Because of the volume that has gone through in the overnight session. Open auction in range out of value. I expect some responsive selling immediately on the open, pushing down into the 57 area. Balance, impulse up, consolidate, push through, and back down. That's the first scenario. So how do I trade that? I'm looking for what is the quality of the trading using Bookmap. And by the way, I wanted to show you. Sorry, I'm struggling with a cold still. I wanted to show you what Bookmap looked like on that news. There's the Yellen news. Very quick change in the order book. Here it is in the S&P, right there. In the S&P, just orders get canceled right away. Notice how everything gets dark, and it stays dark for a little bit, and now it's starting to fill in right here. Starting to fill back in. It took a while for the market to get back in and participate like it did before the news, and now flowing sideways. It's very useful for me to see what the participation has been historically in the order book, and that's why I love that software. But overall back on track. We did scenario 1. Scenario 2 is initiative in nature. We have an open auction again. Again, why open auction? Why? It's an open auction. It's expected to be an open auction if it's opening in new space. So a gap up is expected to be an open auction out of range, because there's nothing to shoot for at that point. There's no consolidation before it, nothing. An open auction is anticipated when you expect that both sides will be participating in the fight. And so here we're opening out of range in value. I expect both sides to participate in this fight. And as we move this composite forward, we see that we are opening right underneath this low volume node right here, right? And so I expect an open auction. I expect a fight here, and then a push through into the upper distribution that then consolidates sideways, 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 and then I'm looking for a drift up into 2568 later this afternoon, and I'm looking for it to rest there. So push through and consolidate and rest there. That's scenario number 2. Okay? So that's how things are expected to play out. If scenario 3 is a spring out, initiative spring out that gets rejected, a push back down through the opening swing low, consolidate, continue lower to 55, and then sit sideways and balance to give us a flag or a flag formation or consolidation into tomorrow's session, the end of the week. So this, even though we had some great selling yesterday, some good volatility, finally the VIX got above 12.5. We're still not accomplishing anything, believe it or not. That's why I showed you the daily composite. Nothing's being accomplished despite these sell-offs. I mean, we're selling off even though it looks like a big sell-off and it's a big day, and news flash, S&P is down X number of points. Really, it hasn't accomplished anything from a contextual point of view, and it's really important to bear that in mind. Okay, we did have good participation in the underlying. The New York Stock Exchange net volume was totally negative yesterday. We had some good participation, but then we took it all back on the close, And to me, that sings the same tune as it's been singing for a while, and that is we flush, we find an excess low, we come back, and we continue higher, and therefore that is why I'm looking for a test up into the 67, 68 area today. That is the S&P. Now, for those of you who want to hang out and listen to the RTY, nope, that's not what I wanted. RTY, there we go. Here's the Russell. Just, I don't know. It's probably too fast for most folks yesterday, but man, I really loved how this thing's been moving. So overall, the Russell has made its move lower. The Russell came all the way back inside of its composite. The S&P remained below it. The Russell was expected to see resistance here in the afternoon at 1493.2. I expected it to butt heads here, fight, and then release and end up down here. I expected it to end up in this distribution, and it did not. It ended up just pushing through and coming back. So the Russell is stronger this morning, just slightly. We're against yesterday's open. We're in the same position we were in before. The same position that we were in before, and I expect that overall, I expect that the Russell is likely to come in with an open auction. I expect it to make an attempt at the high, and I'm looking for responsive selling down as the primary scenario back into the point of control right here at 94, and then consolidation this morning, and then hold steady. I'm expecting the Russell to take a break today as the primary scenario. A pretty wide-ranging day yesterday. The Russell traded from 1500 down to 1481, and overall it's likely to take a break today. So, but the main move is likely to be to the downside towards the point of control. Given the Russell's stance overall, with it being weak on every push up, that wouldn't surprise me if we just drop and just sit sideways inside of a wide-ranging day. I'm not expecting continued selling into today's session. The secondary hypothesis or scenario, God, I got to stop using that word. Secondary scenario is an open auction that breaks lower immediately, bases. We break the opening swing high, and we start to climb back up into balance, 1504 being the first area. This is a less likely scenario. I'm expecting that it'll have a hard time getting through 1500 again, at least on the first try, and then eventually walking its way back up to the composite point of control and going sideways until the close today. That's scenario number 2. So in this scenario, if I see that as the market is dropping, let's show this again. As the market is dropping and it's doing so, and I'm not seeing big prints, I want to see big red dots coming in to show us. So let's go to. So there's not much volume right now, but I want to see big red dots on the way down that tells me that it's a responsive, aggressive market. But if I see it dropping on tiny little bing, 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 bing kind of little prints, then I'm going to be looking to lean like I showed here in the scenario, to lean on the bid and look for a long back up into 1500. That's what I'm looking for on this particular scenario. Okay, so I'll leave you with that. I know it all sounds like pie in the sky theory, whatever, but this, I'm coming in with a plan. And that's really the job. Yes, I can sit here and talk about execution, about order flow, about all this stuff. There's a lot of material on that. The problem is execution for most people. Trust me. I mean, I've been through a lot of people, and I've watched a lot of people trade. There's a lot. You can't turn theory into execution. So the problem is, in order to execute, you have to have confidence in your plan, and you have to have a plan in order to be able to just push the execution. I would not be able to execute if I didn't have a plan based on facts and statistics. And so I come up with these scenarios to give me a visual of what I should expect to see, and then makes it easy for me to click when it's time to click. And that's really the point of this. Good luck today, and I'll catch you tomorrow morning. Take care.